Thank you for joining the Hong Kong Blockchain Week panel discussions. And today the topic is DeFi versus CeFi, the next opportunities. We're so pleased with able to invite experts from, I would say, from this field. And on my left-hand side, we have Frankie Tang from Eversheds, Sutherlan, and Daniel Chen from Hong Kong, and Linda Chen from Zocial, and also Adrian from Liquify. And why don't we kickstart with the definition of DeFi versus CeFi? So Daniel.
Okay, yeah, thank you, Rico, for the introductions. And so for today's theme, we're going to talk about DeFi versus CeFi. So first, to kickstart, we start off with the definition of what CeFi is. So CeFi stands for centralized finance. And so these finances are basically, everyday financial apps, services that we use, such as banks, payment gateways, e-wallets, etc. Okay, so these are something that we are very, very familiar with. And next we go to DeFi. So DeFi stands for decentralized finance. And this is a term that kept popping up over the past several months. And so what decentralized finance is trying to do is actually exactly the same type of things that centralized finance want to do. They want to do lending, they want to do deposits, borrowing, they want to do swaps, etc. Except that they want to do it in a distributed and decentralized manner. So the buzz that you've been hearing from is from blockchains, from using smart contracts, different money legos to compose these different decentralized financials. Yeah.
So Adrian, you come from the traditional buy side. You want to add a point to what being shared by Daniel?
Yeah, I think when I was on buy side, obviously for any asset management vehicles, you are being charged a fee. For the intermediaries or the centralized financial institutions providing you a service. I think that DeFi is a natural evolution of what blockchain want to achieve over the past 5 years, that anyone could enjoy financial services, whether it is asset management, deposit, lending, in a more decentralized and cheaper manner. That because intermediaries now cannot charge us a higher fee than before. And that relies on the evolution of technologies and user behavior. So that's why DeFi comes into place over the past 2 years, becoming a more popular topic, not just in the digital asset industry, but also in the financial industry as well.
Yep. Linda? What's your view?
So I just want to put into perspective. So how is it being different, say, when you, nowadays, everyone knows Binance, you probably trade on Binance quite often in the past few years, but there's some new DeFi exchange coming into the scene, like Uniswap, SushiSwap. So how are they being different? So Binance is actually, in a way, still kind of centralized exchange because they list the tokens. Although the tokens, they're smart contracts protocols, but the way they do it is still kind of centralized, right? You have to approve it, and then there's the traditional order books being maintained. So I just want to highlight the difference. Say right now the biggest DeFi exchange Uniswap. So the difference is the tokens there are not being checked before they are listed, so everyone can list their token. Versus going onto a Binance exchange, you will have to pay a listing fee. So that's the first thing. So there's some potential issue being involved because everyone can list their tokens, but that's also the freedom, right? You can start your project and you can broadcast it to your community. And the second part, the biggest difference is, the way they are trading is using what we call AMM, auto market making. So it's totally different versus centralized finance, where there could be players, books being maintained. So that's something to look at when you start trading on DeFi's exchanges.
So Frankie, so we look at for the last, I would say, couple of months, right? So we can see a huge volume, right, in the space of the DeFi. So what are the reasons, right, behind the booming of the DeFi?
I think it's very interesting to see in the pandemic situation, a lot of the traditional financial activities like borrowing, lending are slowed down because the financial institutions quite rightly want to take a conservative and prudent approach in assessing risk. On the other hand, at the same time, DeFi is taking a very exponential growth in that it trusts not the institution, but trusts the how standardized the commodity or the asset behind. For example, in traditional finance, when you get a like borrowing activities, the asset to be mortgage or pledge, maybe real estate, for example, and there are intermediary checking and procedures involved, time-consuming, and then each of them involve assessment of risk. Whereas in DeFi, the access to be used to get loans, for example, maybe a type of very well-known cryptocurrency or virtual assets, for example, Bitcoin. In a way, the smart contract has recognized and know that this have checked, or the blockchain itself can be trusted to verify that that asset is available as a collateral. So in a time where traditional finance is slowed down because of the adjustment in the market, DeFi, I think, is helping a lot of financial activities in that it relies on standardized smart contract approach.
Yep. Daniel?
Yeah, I think Frankie has mentioned a lot on the infrastructure. So basically, what DeFi has a massive advantage over CeFi is it really encourages innovation. So imagine if you're like a single founder, right, and you want to start like some central like a financial service, and you have to raise funds, you have to actually go through VCs rounds, you actually have to have a name, you build your reputation. That's a long, very, very long roadmap. And from a central like banks or regulators point of view, that's not really good. Like you have like a few big players kind of like dominating the whole financial markets, and there's not enough innovations. There's high barriers of entry, and what DeFi does is kind of break that down. Anyone can deploy something, a new protocol, a new program, new service, a new product, and by doing it in a trustless way, so people can actually vet the contract. So I think what Frankie has just mentioned was smart contracts. They are open source. You can freely auditable, and they can actually find firms to audit them. And in return, like people just trust the code. Okay, it's doing what it's meant to be doing by the code. So for example, I can put in money, I can stake it, use it as a collateral to borrow money, and even use those money to do some other financial activities, right? And so I can make money, I can earn interest. So this is a whole new ecosystem that DeFi has enabled. And that's why it attracted so many users, so many investors, so many VCs kind of looking into the DeFi space.
So, Adrian, I know that your company is also doing fundraising. So is it a new way for all the start to engage in this new infrastructure?
Well, I think DeFi, the popularity is there, and obviously when it comes to, from my company perspective, we look at also the risk perspective as well, and that's probably a topic that we can talk about that later. But there's undoubtedly that we are looking at the space, balancing several factors, and one of them is actually the bridge between the DeFi and CeFi. So that Frankie has mentioned just now, when you could collateralize Bitcoin as a commodity for lending activities, for tons of crypto users to borrow money and to provide lending activities. And the consideration for us as a company is whether we could have real world asset to be digitized in a whatever format, probably an NFT format or security token format, and use it as a collateral for real world asset owners to get funding from the crypto world. And obviously with that real world environment being related, all the KYC, AML, all the risk perspective come into place. But that's true that we look at DeFi space as a huge proponent of what's gonna brought forward with security tokens, with leverage blockchain applications being discussed now in the industries, and we have brought that conversations with multiple investors as well.
I heard about the term collateral so many times. How different the collateral management in the space of the DeFi versus the CeFi?
I think in CeFi, in this climate, there is economic market adjustments. Intermediaries have their own stakeholders. They're highly regulated. They have their own rules as to how much risk they can take, and also there is responsibility by the management or the directors to set the procedure or direction as to how much risk the intermediary financial institutions will take. Whereas CeFi, by decentralization, the risk appetite depends on the actual lender. You and I can be a lender without an intermediary in a DeFi space. So with a lot of people being flexible, not having to subject to these type, for example, capital ratio regime, there are actually a lot of new liquidity released through DeFi, and I think it's helpful in this time when it may be difficult to do startup or to pick up the economy again. I think CeFi and DeFi can work together in that CeFi is much more familiar and provide a lot of assistance and trust to users, whereas DeFi is catering to risk-taking people as well as decentralizing and liberating a lot of capital in the market.
Yep.
Yeah, I actually totally agree with what Adrian, Frankie has mentioned. I think there's this new digital asset class, so it's digital native. And so this huge class known, like we have this group called like Bitcoins, Ethereums. Okay, so these have been around for like years. And so what DeFi is trying to do, especially on the collateral aspect, is okay, instead of kind of like bridging like offline assets, bringing like cash, fiat and stuff, they're thinking, okay, we have all these like digital native assets living on the blockchain already, and they have value. And Bitcoin itself has been relatively stable over the years, it's been around. And people, it's like, okay, if I'm just gonna let my Bitcoin, my digital assets sit here, yielding no returns, that's not a very good deal. What if I could use that as a collateral, stake it into a trustless custodian, which is, for example, a smart contract, and I could borrow money from it. So similar to like a bank, right? I could just go to a bank, they would assess my credit, and they would say, okay, I can lend you like 60% of whatever you earn or your house, right? Your flat. And so similarly, the digital native asset is like for Bitcoin, Ethereum, I could kind of like use it, lock it up, and borrow up to 60% of it. So it's kind of similar to, okay, that's a real asset. And basically DeFi has mimicked the real world applications. For example, they have like auctions, they have like sell-offs. If your asset collateral drops too much in value, they will actually liquify it, right? And so all these things are trying to mimic the centralized finance world. So DeFi is kind of copying that, but doing it in a trustless, decentralized way.
And speeding it up, I think.
Yes, speeding up.
Yes, just to say why there's like such a boom, if you compare it, right, to the world we're in right now, which is like with extreme low interest rate, and that's why the comparison between the traditional finance and the DeFi is getting obvious to the user, right? When you come into the space, you right away saw the opportunity because you can see the return is like much higher. But there's a lot of costs being involved. Like as blockchain user, we know there's like transaction costs, there's like costs, putting the fiat in, right? So there are all these costs that kind of we talked about in the past as like the barrier to entry for the user. But right now, the interest, because the interest difference is such huge one, right? So people right away see the opportunity and they're willing to go into the space, getting through all these hurdles because of the DeFi's incentive, the return, the yield, and how they utilize their digital collateral is much more innovative and give a much higher return to the user. So that's why I can see this is how they market DeFi and in this climate. And also on, why a user are willing to, say, provide their liquidity to DeFi compared to maybe in the past when they're doing like ICO is because nowadays, you don't have to purchase the ICO tokens. Instead, you provide your liquidity. And the liquidity is being locked, and you're given a token of that protocol. Say, maybe it's the protocol of Compound, right? That's the reward you get. You don't get something in the liquidity that you provide. And therefore, you have a stake in the project. The projects, if the token price goes up, you have a much bigger return. So that's how they lock it down with you. But they don't ask you to buy the token. They ask you to stake your liquidity in their projects. So what happens is when the project is not running great, let's say you're really losing faith in this project, you can take your liquidity back, and that's the risk the team, like the development team, is facing, right? They have to deliver innovation. They have to deliver the roadmap they promise to the users, so the community can grow. So that's why we are seeing a lot of good projects in this space because the incentive aligns under the new DeFi, design. That's what I see from the user perspective.
Yeah, I agree with Linda. As in picking up the liquidity is actually a way for the issuer and the investors to manage fundraising better and also the investment. And stepping back a bit, I think a lot of people are confused in this space about DeFi is just being crypto related, but it's actually a way to re-innovate capital market with different examples, obviously. So one of them is, for example, when we trade stocks in the traditional market, whether it's you with centralized financial institutions or brokers, basically you have the T+2 issue. Whenever you sell a US stock today, you want to sell your US exposure, buying a global exposure. Mondays take 2 days to get back in your bank account. You basically don't have that liquidity per se. But in a DeFi market, for example, you could trade synthetic exposure. So I could trade a synthetic US exposure directly to a global exposure. That's something that my company has been looking at without DeFi, tokenizing mutual funds or index exposure. That could be done in synthetic asset exposure in the DeFi world for users, end users to do that. Obviously, I think Daniel just now touched on automated asset management, something that you could, in a DeFi world, a user, as long as they have digital asset, not necessarily Bitcoin, you could put those money into a protocol, and the protocol with the design of the smart contract and the algorithm can automatically invest for you. To me, it's a new generation of robo-advisor. That robo-advisor is still a very centralized company. The algorithm itself might not work, but in the DeFi world, tons of people could vote together for a better algorithm to be improved according to time. And from a user perspective, you pay tiny fee. That matters a lot to whether I would use the robo-advisors. So to that stepping back is DeFi is actually a way to improve not just capital market, but overall traditional finance, and whether my interest is how that could bridge with existing institutions in a compliant manner.
Yep, I think you guys talk so much about the development and also the benefits of the DeFi. So I think everyone comes to the course. So are there any risks associated to DeFi?
I think in the past 2 years, when DeFi is getting traction, we definitely see the exponential growth. It's almost like a vertical line, especially in the summer months of this year. My fellow panelists may know that I think recently in the past month or so, or 2 months or so, it's kind of like cooling a little bit instead of like keep on shooting up what in the virtual access space people say we're mooning going upwards. It is interesting because I think we've seen some of the incidents where DeFi has a lot of reliance on smart contracts, and sometimes these smart contracts may not be totally safe. It can be very safe, as Daniel suggests. They can be audited, open source. Everyone can audit it. But in the innovation world, a lot of the investors or participants are so enthusiastic that sometimes they may launch that decentralized protocol before proper due diligence or auditing have been done. I think there are risks in that. There are incidents that virtual assets are lost. And in this regard, I'm just as a lawyer myself, I'm looking at law is always lacking behind in terms of like catering and adjusting and providing an environment for level playing field in the technology space, which is very normal, because if law is going too fast, it will stifle and narrow the scope of innovation. And just mentioned earlier this month in November, the government proposed a new regime to regulate all virtual access trading platform in Hong Kong. It is still in consultation stage, and my team and myself are actively looking with the industry to put in some proposals. But so it is a move where the Hong Kong landscape is looking at probably with the actual enactment of the new regime, which require all virtual access platform to be regulated and licensed. There may be even a stronger push to the DeFi space in that people want to be more liberal and in terms of enabling decentralized users, but it remains to be seen.
Yeah, I think that's actually very good points, and I think from the regulatory point of view, I think they're pushing out a lot of like licenses, guidelines, point of views on how to regulate like, digital assets in particular, and I think they're really concerned about the risk, because like DeFi is really open to everyone, and historically, for historical reasons, like high risk instruments, you don't want to open to the public, right? Because like if people just like gamble along their money and lost money, and there's no way to kind of like sue those anonymous people who actually started those smart contracts, and there's a risk of instability, right, across the economy. So especially I think there's a lot of movement around CBDCs, central bank digital currencies. And particularly for Hong Kong, they just kickstarted the HKMA Lion Rock and Ethanon project, which Consensus, PwC, and us Forums Hong Kong are part of driving that project forward. And we could see, from the IMF, BIS point of view, from the Global's point of view, they're kind of discussing about like central bank digital currencies and stable coins, global stable coins. And so there's this kind of issue about, okay, whether a private institution-backed stablecoin makes sense. It could go, for example, it could have a bank run. It could go out of business. And so who's going to back those stablecoins? What's going to happen to all those fiat-backed stablecoins that's kind of deposited at their own bank account? So these are all the kind of like financial risk factors that they are concerned about, like all these like stablecoins, which stablecoins are the cornerstone of DeFi because you need stablecoins, stable digital assets to kind of like borrow money and do all these like financial activities. So so there's a global movement, tackling on how we should tackle this like digital currencies and digital assets.
Adrian, you want to add a point here?
I think one risk that in the DeFi, first of all, with the risk is it is the theory or the theoretical or ideally is too good in terms of the composability. The idea of being you could interact with other protocols, meaning that your smart contract layer would get exposed easier than before when you work in a single platform. That a lot of times is not hacked, it's being exploited for a smart contract. So it's not illegal to exploit a smart contract that is designed not good. A lot of incidents over the past 2 months that cryptos being taken away from a protocol by exploiting the smart contract. So that is a huge risk, but composability itself is a good thing. While at the other side, I think Daniel mentioned about a CBDC, and that also points to a direction that my company has been thinking about in terms of in the DeFi world, you can't govern a protocol that much because users can enter a protocol itself, but you can govern from the entry point, which currency you use to enter a platform. For example, if it's a CBDC, then the governance can come in from it's an intermediate level, a bank wallet holding the CBDC, and KYC, AML, suitability test being done on a bank level. So once a user holding a CBDC is proven to be a professional investor or something in the future which is eligible to use the DeFi, they can enter a DeFi ecosystem, which protect the DeFi ecosystem being intact from the centralized world. But there's a certain way to govern that, and we're exploring as well. But my feeling is in the future, it can go completely decentralized for the DeFi world. And that will raise a lot of concern in the industry from an investor protection point of view. And that's obviously, we'll see movement probably in Asia faster than US, and that's what we're seeing now.
Any reason why Asia will be moving faster than the rest of the world?
But from my point of view, it's just my view is in general, digital asset movement is quite driven by Asia compared to the Western world, whether it's Europe and US. That's my feeling that in Asia, a lot of countries, especially Japan, and have not been able to capture the internet wave, going through deflation environment for quite a while, that this time the digital asset and blockchain industry, the flourishing industry actually brought to the next internet wave in Asia, with China leading the wave in CBDC, Japan, Korea, Hong Kong, Singapore actually leading the way over the past 2 or 3 years. And that's why my company, when we thought about headquarters in UK and Hong Kong, we actually chose Hong Kong.
Yep. Linda, as users, any comment?
Yeah, so I think, we all talk about like the future where like the regulators coming in, I think that's a very probable future, but obviously from experience, we know that's going to take a very long time when it comes to a conclusion. So as someone who looking to get into the space right away, there are a few things just to bear in mind. So first of all, because of how the DeFi is being designed, there are hundreds and thousands of new projects coming out every day. And because now, like, you're supposed to get into all these projects yourself because there's no one like the centralized exchange or the ISO project that with a very, complete white paper, like usually they start with like a Medium article and they just started out with an idea and they want to develop with the community. So you have to like really decide at a very early stage, like whether you want to get into the project. But there's like so many to look into. So that's the first thing. Going into DeFi, you'll be getting very confused. What are the good projects? And from our experience, like 80% of projects are still something not worth your time. So despite all the good things we talk about, don't be mistaken that there are a lot of like good projects waiting. I mean, you still have to kind of look into each project that you're going to invest. That's the first thing. And the second thing is being how the DeFi exchange is being designed. Is like, first of all, I mentioned like everyone can list their token. So even there's like a good project, there's a chance someone else trying to create a token in their name. So just to confuse you. So as a user, the barrier increases because you have to check something like the contract address on the Ether scans yourself. So there's like multiple steps for your own security reason to get it right before you can start investing in the right project that you believe. And the last thing is regarding the trade. So right now, like I mentioned, the DeFi exchange use the trading mechanism called AMM. So that means you're always buying at the market price. So that's completely different compared to the centralized exchange where things are more sophisticated, especially for the more experienced traders. So when they come into the DeFi space, they also have to accept the way it's being designed. So you will have to expose your risk the same as the other people in the market waiting to trade the token. So that means what happened with buying at the market price is there's a risk card, there's something called fund running bots. They are listening on the protocol. So if you're ordering a large transaction, with a large amount, they will naturally want to take your order and create a spread and sell it back to you. So if you set your slippage very high, so when you use a DeFi, there's usually a settings allowing you to set a slippage. So because it's your ultimate buying price is subject to the market movement, so you're likely to end up like few percent higher. So if you really want to get your order through, you will have to set a higher slippage, and that's how people taking advantage of your trade. So my advice for to avoid this situation is to not to set a very high slippage, but set a very high gas to make sure your trade get into the blockchain and get verified at once. That would be trading advice, and that would avoid being your market price being driven up by other malicious players in the exchange market. So that's it. That's something I think we should all look out when we do it.
I think leadership first, right? I would say what need to be consider when you're doing trading. So what do we want to see in the next 12 months' time, in the development of DeFi?
I think it's general awareness of the potential that is brought about by the new technology. I think a lot of us are still learning, even all of us every day, a lot of new protocols, and blockchain week and forum like this may be the best way for us to get engaged and learn about new innovation.
Yeah, I think just keep it short. I think it's just like keep an eye open, keep your minds open. Just read a little bit more. There's a lot of good blogs now and good quality articles on DeFi nowadays. And the next 12 months will be very, very interesting. There will be, it's just the first wave. So definitely second, third wave will come. And we can see there's a lot of players, both from the CeFi world, DeFi world. Everyone's kind of trying to come in, either to bridge the traditional assets and the digital assets, or think of new business models like crypto, robo-advisors, etc., aggregators. So definitely very interesting, and definitely keep an eye open.
Yeah, I would say at this stage, even though there's a lot of issues we discuss, but start learning, the system design, what's DeFi, what's the philosophy behind it. And when you actually get into it, I would advise you to actually think of how much time you can allocate to do this, because like I said, this is highly unregulated space. With a lot of projects, you do have to kind of decide for yourself. And from my personal experience, that takes a lot of time at this stage because everyone is kind of marketing their own projects. So I'm looking into the next stage where things are, there's like certain protocol being set out on how to start a DeFi project so that people can follow. So right now it's very hard to follow. I think that would be a barrier for people to really commit to the DeFi investments. So I think that will come in the next stage, and at this stage it will for someone who are really attracted by the technology and willing to start to commit their investment and time into this space, which is I think all of us here today. So and then I think next stage we will see more incentives for more public and general user coming into the space with a better setup. So that's what I think.
My interest is always to raise general awareness among institutions. So interestingly, not among the end users, because a lot of people are doing that. So over my past 3 years experience, my record was in doing tokenization education for 3 years with institutions, particular banks and asset managers. And that took probably 3 years for people to start have the learning curve. And for DeFi, I think I actually started already from a more educational point of view for institutions. My feeling is take probably 1-2 years for them to really learn about the concept, and with tons of them out there, before it really got adopted for whatever tokenization or digital asset. I think there's a huge learning curve in general about blockchain technology and digital asset. To jump into something like DeFi is a very steep learning curve for a lot of people, and I guess we are in Hong Kong, probably there's less than 100 people can talk about DeFi in exact, precise terms. So I would expect in a year time, probably we have to enlarge that group with someone like you guys to spread the message out.
Yeah. I think as Adrian said, right, we probably have only 100 people know the topic. So we're going to see our speakers very soon, I'm sure. So thank you once again, for joining us. Thank you.
Thank you, Rico.
Thank you.
Linda, and also Adrian.